is there any suspense here really about whether it's going to be the end of QE?
It perhaps will be the end of QE, but I think that overall the Federal Reserve will come in with a dovish message. In fact, I wouldn't be surprised at all to see them bring down their Fed rate expectations for 2015 from that 1 3/8 handle to potentially about 75 basis points. Janet Yellen knows very well that after last meeting, that inflation expectations came down considerably, and that really is something that she's trying to avoid. So she's going to really come in with a dovish message.
And in your mind, does this have more to do with what's happening here in the U.S., or is this really what the Fed has talked about more recently, that they're looking around the globe, that they're cognizant of the risks, particularly coming from Europe? Does it have more to do with that?
I do believe that to be the case. Global growth looks like it's decelerating considerably, in particular on the emerging market side. The Eurozone, growth there is dead in the water. They do want to make sure that the financial system is somewhat more, let's just say, relaxed. Okay, there's been a tremendous amount of volatility there, and Fed policy has been quite a sedative to the financial system. But overall, here in the United States, the economy is growing at a 3 handle. You do have earnings growth that has been, quite robust. Earnings growth of 6%, top line growth, which we haven't seen before, growing between 3.5% and 4% for this quarter. So that bodes well overall for the long term for our equity markets. But in particular, the Fed is keeping a careful eye on the Eurozone.
And when you're looking at equities, you guys are a little bit overweight in equities at the moment. Where are you seeing as areas that are particularly attractive?
Well, we like healthcare companies in particular, so a new position in our portfolio is Abbott Labs, for example. We believe that there's about 15 to 20% upside over the next 12 to 18 months with Abbott. In particular, also what we like, because it's gotten hit so hard, are some of the large cap technology names, some of the old world technology names. So look at a Cisco Systems, for example, sitting there around $23 a share, $6 of cash per share on the balance sheet, and it is gradually growing. Our price target there is roughly about $30 a share.
Now, just sort of glancing at these, I'm looking at Abbott Labs. It gets about 41% of its revenue from the U.S. Cisco, obviously, a global company as well. So, how much of a risk is that? Is buying multinationals at this point, especially given the strength that we've seen in the dollar?
I think you've had that corrective phase right now, and in particular, I would be buying now. Over the long run, we have 18 to 24 month kind of perspective on this, not a 5 to 10 trading day kind of perspective.
Okay, Chad, we got to leave it there. Chad Morganlander, always a pleasure to talk to you.